This week started off much better than how last week started. The question now will be, will this week finish how last week finished? So I'm going to break that down in today's video to see what to expect now, how long we can expect this bullish bias to last, and also we take a look at the leadership of this bullish move with a look at a kind of a combination of a couple of sectors for today's trade idea. Let's get started. This is the market outlook for June the 4th, 2018. My name is David Settle. All right, thank you for tuning in to tonight's market outlook video. Glad you found us, especially those watching for the first time. Keep coming back for more. Subscribe to our YouTube channel by mousing over the logo in the bottom right corner of your screen. Also like today's video, clicking the thumbs up, and comment on anything that stands out to you from today's video. Join our daily Market Outlook email list. There's a link popping out in the top right corner of your screen. Click on that link. That will take you to a sign-up page for our email list. Follow me on Twitter for more content like this, and join our Market Outlook community on Facebook. All right, well, let's take a look at the S&P 500 first with the market forecast indicator. You can see the posture remains strongly bullish with the intermediate line up here above the 80th percentile, the green line. The near-term line now confirming that bullishness with its foray into the overbought zone there, upper reversal zone. So, again, the expectation is 1 to 3 months of an intermediate rally, probably more towards the 3-month end of things with market sentiment coming off of this low point. Now we are, again, let's see, this intermediate line turned up here May the 4th, so we're a month. We're a month into this. We can expect another month or two of ups and downs, but, near-term ups and downs, but the trend being to the upside. And then you consider market sentiment line still hasn't crossed above 50 yet. And when it crosses above 50, that's when you can expect, multiple intermediate runs. This being obviously would be the first one if we were to continue our way up here. The momentum line hasn't, it's just kind of, now it really doesn't matter what it does as long as it doesn't pull back below the 5th percentile. That's when it can be an extreme low point that can be a posture changer, a kind of a prelude to a posture change. And we haven't got that yet since we turned bullish. We've had a couple of oversold levels, but every time we bounce right off of that, just like we did here, this intermediate confirmation signal bouncing right off of that in 2 days, including today, with today's move getting above all these highs. So last Tuesday when we started the week, we closed below that really sideways 2-week range, but not below the moving average. Now we are, a new week, and we're now above. Not a whole lot, but we're above that 2-week range. So how, quickly things can change. You can see, again, moving average is green, which means we're above a rising moving average, shaded green, because the posture is bullish. So positive sign. The Dow Jones is the one that's been lagging behind, so it's not above those highs yet. Its posture has turned bullish, though. So this is the one that's been the weakest. It was more bearish than any of the others, and now it's turned back up. So it's bullish. You can see its market sentiment is a lot further below 50, so it's got some room to go. So, this blue chip index is lagging behind, but the near-term line getting in the reversal zone did not get in the reversal zone last time. So it's a positive development for a bullish trend. These near-term rallies typically last 7 to 12 days, and you can see we're just a couple of days into it here. 1, 2, 3, 4 days on the S&P 500, getting the blue line up above the 50th percentile. So good, good near-term bounce. Now we're not up, we're kind of up to slightly higher near-term highs. You probably would like to get up a little bit further during this 7 to 12 day run. Expected 7 to 12 day run, so really solidify that trend, and it's what you expect it to do. You can see here, let me get that ringer off. You can see on the NASDAQ, which has been one of the more bullish indexes, its posture is strongly bullish. Excuse me, 95th percentile, 100th percentile practically on the near-term line. So very, very good bullish pattern. Obviously, it never did pull back here below 50, the blue line, like the S&P did. So, this has been on a bullish near-term run for multiple days, and now close to getting up above the 52-week intraday high point. You can see the 52-week closing high we have surpassed. It was 75.88. On Friday, we closed at 75.54. And then today up 52 points to get to 7,600. So new 52-week closing high for the NASDAQ composite. And the Russell 2000, which has also been just as bullish, you can see getting a new high today. And strong bullish posture, near-term line up in the reversal zone to support that. So again, we're getting ups and downs on a near-term basis, and we expect that to continue. This one's been on the Russell's been outperforming for a while, so it's been on the longer intermediate run than the other indexes have. So it's this is back in middle of April, so we're a month and a half into this intermediate rally for the Russell 2000. You can see its market sentiment never did drop below 50. And you can see now it's the stronger positioned of all the major indexes, which is what you want when you're bullish. You want the riskier asset class to lead, because that means people are willing to take the risk of owning small caps more so than large caps. Even like I said, even though all of them are going up, when this is leading, that's a good sign for risk appetite. So far on the week, the S&P 500, again, only one day into the week, but it's doing well here on the long-term chart, being above the 50-day moving average. The 50-day moving average rising away from the 200-day moving average. So, again, a shaded green chart here is a positive sign for stocks when you see that. And again, of course, looking at the 3 green arrow chart, back to or close to having a shaded chart there. Above an upward trending moving average. MACD is just a smidgen away from being a green arrow, and of course the stochastic showing a phantom green arrow. When you break those lines down, the moving average is down. You can see, the 8-day hasn't quite crossed above the 17-day yet. That's why we don't have the green arrow there, but it's close, and the stochastic same, and above moving averages that are all rising. So the trend continues to remain to the upside for stocks. Again, potential near-term pullbacks in the future, but the trend right now all points to the upside for the S&P 500. We got a new 4-week high point today on the S&P. We broke up out of last week's range, out of the last couple of weeks' range, broke up to new 4-week high point, so pushing that up high up a little bit. And this one will be moving up a lot here tomorrow. So you'll see tomorrow it will pop up to that low point right there. So that means that this 4-week midpoint will probably move up into that area here. And again, still, it doesn't change anything in terms of like whether or not we're trading in the upper half or the lower half of the chart. But as long as the low point maintains its position over here in the 4-week range and the high point maintains its position over here, that's a very positive development. As that high point starts to transition more towards the middle, like it was without any new 4-week highs, that's when you start to concern. Right, when this high tag gravitates towards the middle, and the price gravitates towards the middle of the index, that's the concerning sign. And right now, I'm just not getting that. You'll see that on more extended near-term pullbacks that will turn into a bearish intermediate posture, but obviously not getting that right now. You can see the range, just really, really small trading range there. Today's range. Just under just under a point, and the volume really, really light as well. Summer volume coming in, which means that you have the volume and the trading ranges both declining towards 52-week lows for these averages. You can see now almost below 1%. The ATR relative to the price almost below 1%. Again, the pointed lower on those charts is bullish, so it continues to be a good sign for stocks in that regard. Volatility, we'll take a look at the volatility chart here first with the MACD and stochastics, continuing to point towards that 12.5 level. So this low point here is reaching this previous low point that you had on the MACD and stochastic. And then, of course, when you look at relative to the VXV, back to the sweet spot of the bullish zone, that 85%. So more charts, just kind of confirming the bullish bias and the bullish posture we should have on stocks going forward. And again, market sentiment being where it's at, this is the expectation for an extended bullish run, however long it lasts. The expectations there for a multiple bullish intermediate run, and we're in the first one right now, and we're probably in about the middle stages of the first one. So we can still got about another few weeks left of near-term highs and lows that continue to point to the upside. So to summarize the technical outlook here, we are in a bullish trend. We have expectations for more bullishness to come. How much is not nearly as much as we've had before, but we have the expectations of a new market sentiment run, which consists of multiple intermediate rallies, of which we're in the first one right now, and we're about halfway through potentially this first one, according to averages. Which would give us some more weeks of higher near-term highs and higher near-term lows to run through, which typically lasts 7 to 12 days each. So kind of gives us an idea of how much longer we can expect some bullishness before we get a new intermediate low point where that green line in the market forecast drops below 50. So love to hear your thoughts. Do you agree? Do you disagree? There's a poll just popping out in the top right corner of your screen. We haven't got to 100 yet. Let's see if we can get out of 1,000 views roughly. Let's see if we can get 100 votes. Do you agree with this market outlook? This bullish posture we have? Do you disagree? If you disagree, comment down below on the YouTube channel or on the blog and let me know what you're seeing that suggests that we're not as bullish as what the charts are showing us right now. Of course, nobody's 100%. Nobody's always right. So I'd love to see your thoughts on that and spur some interaction here. All right. All right. Now let's transition into what's driving the price action today. You can see on this 2-week comparison how long-term bonds have been an outperforming asset class. It's starting to pull back here the last couple of days. Crude oil had been an underperforming asset class, and it's getting worse over the last few days, and it continues to drag down, now down 9% in the last 2 weeks. So big decline, and continuing that case. You can see developed markets continue to underperform up today, but continuing to underperform everything else. Everything else relatively flat. I mean, so this 2-week period has been some ups and downs, but by the end of it all, flat as a pancake. Today, when you look at just today, emerging markets were the biggest winner, up over 1%. On the other end of the spectrum, which is not a typical combination to have crude oil down over 1%. Long-term bonds declining all day long, which again, yields and crude oil, inflation, typically those things move opposite and they move together today. So not a typical relationship to have crude oil down here when these other things are happening. You can see U.S. stocks rallied. All stocks rallied today. Like I said, emerging, outpacing everything. But until the very end of the day, large cap stocks were outpacing small caps. Small caps made a run at the very end to finish higher, but just barely. And you can see the dollar back here with down for most of the day, but up off its lows, and gold up for most of the day and down from its highs. So, I mean, look at that. I mean, just about exact opposites, which is what you expect. It's an either or currency trade, right? When you're trading either the precious metal or the piece of paper. By the end of the day, kind of coming together. They're both down a little bit, but coming together there. When I take a look at the interest rate hike expectations, there wasn't a whole lot from an economic news standpoint. We had factory orders out today, and they were better. They were better than or they were worse. They were bigger number than expected to the downside. But again, looking at the year-over-year figure, which is what matters, new orders still on an upward trend. You can see there's been ups and downs pretty much every other month or every couple of months. We've had a couple of months of upward swings, and that usually leads to a downward move in terms of new orders. But the trend is still remains higher. So you need a few down months before you really start to say, okay, things are getting worrisome here. From an economic surprise index, we're still just a little positive. So we haven't really dropped down to the negative yet, which we haven't typically done since we had the one last year, and then here when the QE fell off the table, and this is when there was some, with the election, there was a lot of anticipation of fiscal moves, and then a lot of those expectations kind of came off the table throughout most of last year, until the end when the tax reform bill came out. And so you can see how that impacted the economic surprise index. And right now we're rotating. This doesn't stay up high very long. We go up, we go down. It doesn't stay low very long either. So we're kind of in the downward mode. We'll see where the bottom falls out. You can see from a global perspective, this typically is right around the bottom. So we'll see if we end up popping back up there. The odds of a rate hike, of getting the fourth 2018 rate hike by December, jumped up to 40% now, over 40%, where it was just 33% Friday, and a while ago it had dropped down to 25%. So it's starting to ramp back up again. This is where we were here a month ago. We fell, and now we're ramping back up, and so those the odds of those rate hikes just keep adding up. Here's the third one for September, which would be 200 to 225 basis points, now at 70%. It was just at 56% a week ago. So that's jumping up too, of getting a rate hike every quarter. And of course, it's practically 100% here in June. If we take a look at each individual asset class and how they're performing, you can see the pullback that we're getting in bonds here after outpacing for a while. And you can see some of the trends. I mean, look at crude oil. Second day in a row that the futures contract has gotten, today would be the second day, and this is barely starting. To the period that ended today had got a bullish cluster, an oversold cluster on this. So we'll see if that ends up playing out. Obviously, the intermediate line is well below 20, so strong bearish posture right now, below a downward sloping moving average. Not the best sign there. You can see too, the dollar is on a bullish trend, and it's got a strong bullish posture, and so it's putting pressure on all of these. Look at commodity prices dropping significantly there today, and then gold also being pressured by the strong dollar. So that trend has been up, and that's helped. It's helped some things and pushed some things down. Emerging markets have been underperforming, and gold and commodities have been underperforming. And the question is, how much longer can the strong dollar continue to make a run when a lot of that's been fueled by the weakness in Europe? And you don't see as many headlines coming from Europe these days. That generally will precede, that lack of headlines will precede the turnaround that you'll see in the single currency, and see if that ends up putting pressure on the dollar simply from a pullback standpoint, not necessarily like a new bearish trend, but just pulling back some of what this. I mean, that's a strong move in a matter of a month and a half. Even just a Fibonacci retracement would be, be a pretty strong move for the dollar because of how big that impulse move was, and any kind of pullback in the currency, considering how strongly bearish some of these commodities are, will be a positive for them in terms of rotation, asset class rotation. The sector rotation kind of looks interesting here. You have the leaders bouncing back and breaking out, both of them. Technology really last Friday, and then discretionary today. So big strong moves in both those leaders, which have strong intermediate postures right now. You can see real estate's also leading, especially relative to its interest rate sensitive counterpart here, which is starting to decline again, showing a bearish posture. That's why it's shaded pink. Energy pulling back today, as we saw, with commodity prices down, and especially those agricultural, but energy prices down. You can see staples bouncing up a little bit today. It's got that rising bullish posture. Healthcare, that other another safe haven area, its intermediate line is up almost to 80 now, showing a bullish posture. Materials is starting to bounce back up again, showing a bullish posture with a rising moving average. So bullish here, and of course these two remain bullish, and healthcare is looking more bullish with a rising moving average and a bullish intermediate posture. And of course real estate, that's where our strength now, and the weakness being in industrials with a falling in intermediate line, even though we're above a moving average, but still in a weak bearish posture, but bearish nonetheless. And of course utilities has been bearish, especially the last couple of days, pulling back a lot of that gain that it had been back below its downward sloping moving average there. So that's where our weaknesses in these. And if I look at the sector rotation chart here, zoom in on just today, there's the strength in the consumer sectors and technology, but look at staples and real estate doing really well. So a little mixed bag in terms of technology and discretionary. Okay, those are leading. That's what we want. But staples and real estate also leading. So not typically normal to go with these. So it's kind of interesting there. And on the other end of the spectrum, you have utilities really suffering and falling down today when the market was up. And look at industrials pulling back too. So industrials had a really down day. If I zoom out, you can see real estate's had a good couple of weeks and utilities had a good couple of weeks until the last couple of days and pulling back there. And you can see now technology and discretionary maintaining that strength, that position of strength and leadership. And you can see on the other end here with that stronger dollar, materials and energy and industrials lagging and showing declines for the 2-week period. So today's trade idea comes from that kind of combination of the technology and consumer sectors, even though technically eBay is in the XOK ETF and the technology ETF. But you can see today it's been a good day for it. They got 3 green arrows on the MACD and stochastics. You're coming up off of a new set of 3 green arrows. Here you had 1 red arrow, so the last bounce off 3 green arrow low point. Never really got that 3rd green arrow there. So it was, back here was our last set of 3 green arrows, and now we're getting another one kind of off of this higher low point on the stochastics and higher low point on the MACD too. When you look at it on the 2-line versions here, let's take a look really quickly on the 2-line versions for eBay. You can kind of see how breaking up above the 8-day moving average and 30-day moving average and the 8-day now really close to breaking up above the 17-day, which gets that MACD up above the 0 level, and you can see stochastics close to crossing above 50. So and today's breakout move breaking above all these high points, as well as breaking above the Bollinger Bands for eBay. You can see getting up above 100 on the %B down here with the Bollinger Bandwidth as low as it is. Typically can be a positive sign, a trending sign. So there's an opportunity for a bullish trade here. And of course, it has been a bearish trend, so how bullish you want to be. You can obviously buy a call option, you can buy the stock, depending on, if you're that bullish. Or of course, just buying or selling a put, selling that mid-30s put. With the spread not being so far out and you're close to 45 days, and then buying the put for protection gives you a decent credit, about the credit that you look for with a decent probability of success here. If I were to set my slice to break even, you can see, and change my probability mode to in the money, you can see I got a 2/3 chance of success of making money on this trade. And of course, setting the slice, adding the slice to the chart here. There we go. You can see the break even puts us below the low point that we're bouncing off of right now. So we'd have to pretty much erase the bounce that we've had and erase the breakout that we've had. And that would give us a good sign that things are going in the wrong direction. Of course, going for a $50 moves mean that we could take a $50 loss, and that puts us about $37 down in this area right there. It'd be as far as it can go down before we'd say, time to get out of the trade and take the small loss and move on to something else. So that wraps us up for today, and love to keep discussing this market outlook with you. And you can do that, remember, in our forums, which is on marketscholars.com. If you go to, again, if you're watching this on the blog, there's a link right above the embedded video. It's already in the blog that will take you straight to the forums. There's also a link popping out in the top right corner there that will also take you to the forums too. Remember to subscribe to our site to be able to participate in the Market Outlook forums. As always, thank you very much. Remember to subscribe, like, and comment on the video YouTube channel below. Follow on Twitter and join our Market Outlook community on Facebook with links in the description below. Thanks again for your time. Have a great evening, everybody. We'll see you all next time.